Hey guys, my name is Aliyu Justunia. Today is the 13th of 30 day series where I promise to teach you Forex trading from zero to hero using the ICT trading concept completely free. We have now successfully completed Module 3 where we covered fundamental analysis and how global news and economic events influence the market. Now we move into something even deeper. In today's lesson, we are going to begin Module 4 where we will be learning about trading psychology. This is a difference between traders who lose and traders who actually make money. Because in trading, your mindset can either build your account or destroy it. So stay focused, control your emotions, take notes, and let's get started. So this is our table of content. We are going to learn about what is even trading psychology. Yeah, and this is just the our table of content. So first of all, what is trading psychology? Trading psychology is the study of how a trader emotions and mindset affect their decisions in market. It focuses on managing feelings like fear, greed, overconfidence, which can lead to poor or impulsive trades. In short, it helps traders stay disciplined, control emotions, and follow their trading plan consistently. So, the first thing that we are going to discuss is the first thing that you need as a trader. You need to what? You need to, like, the first thing that you need is you need to know yourself first before you even become a profitable trader. For example, like understand your personality, strength, weakness as a trader. Your mindset determine your long-term success more than any strategy, because you need to understand who you really are. Are you the type of person that, like, what scare you? You know, all those kind of things, just to understand yourself so that you will build your trading psychology around who you really are. So the second thing that you need is you need to backtest. After you learn technical analysis, after the classes that we have done in module, I think, 2, technical analysis. So all those knowledge, you shouldn't supposed to just go into market blindly and start applying those things. No, you need to backtest, like to go back to a previous chart and try to see if you can be able to see your setups there, like see your that your technical analysis it is effective, like what is the win rate for that your analysis. So study your preferred pair or commodity to understand its behavior. Backtest your strategy on historical data and forward test it live on a demo or small account. Don't start trading today and go and fund your account. No, start testing with demo account and doing the back testing to, like, gain more confidence on your analysis. So, and also you need trading plan actually. You know, everybody has his own way. Like, as I told you earlier, we have 5 modules. We have what? We have we have technical analysis. We have what? Risk management. We have what? Trading psychology. We have fundamental analysis. And the fifth one is what? Strategy and execution. So those ones, it is you that you will come up with it based on your what? Based on what works for you. So, trading plan, what are you going to do in that trading plan? Create a clear and realistic trading plan. Then define your entry rules, risk per trade, daily goals, and trade management process. For example, let me show you my trading plan. This is my trading plan. As you can see here, so I risk no more than 1% per trade. and always calculate risks before entering a trade. That is to calculate my what to calculate my loss size. I think I show you from my risk management video. I showed you um, how to calculate your risk. So do not interfere with an active trade except if you are to move your stop loss into break even, add to maybe positions if rules are met, book like partial profit. So those are the only things that I can do, that I did. Sorry. Set your trade, set your trade and walk away from the chart. Review the trade every 15 minutes, because sometimes if you stay there and keep staring at your chart like while it printing the candles, you might end up closing it. When you saw like one giant retracement, you will just go ahead and close it. But when you let the market do what it wanted to do, then you will see a good result. Then no revenge trading. After you lose and you will go and said maybe you are going to all those kind of things. So these are my trading plans. I don't want to waste too much time, reading this for you. But if at the end of this video, if we still have enough time, I will come back and review this my trading plan with you guys, so that you will like maybe get an idea of how are you going to come up with your own. So let me go ahead and continue. So you really need job. Oh. Trading is not like trading cannot make you rich actually. Like you need business, like you need like sustainable source of income, because that pressure that you need to make this money if you don't have any job but trading, that pressure that you have, that you must make money can even stop you from becoming a profitable trader. Serious. There is so many traders that they are very good in their analysis, very good in risk management, they're very good in everything, but only this topic can stop them from being a profitable trader because they don't have job. They don't have like any backup money that they can be using that money, that they can be spending that money while they are learning trading and using that money to fund their account, buy from all those kind of things. If you don't have anything, trading is really hard for you. You might end up not becoming a profitable trader, and you will be thinking trading is a scam. Is a scam. No, it is not a scam. It is something that you need to sink your psychology. Like it is psychological this thing. So never rely solely on trading as your only income when starting out. Maybe after you become a profitable, you can quit your job and So having a backup source of income reduce emotional pressure in your trading. Yes. So dealing with losses. So the first thing that you need to like put it in your mind, accept losses as part of the game. That's why you need risk management. Because no matter how good your analysis is, you are going to hit SL. So that's why you need to have a good risk management plan. Because even the profitable traders, maybe they are winning like maybe 50% and 50% loss, but because they are very good in risk management, that's why they are winning, like can cover the loss, and they even have profit on top of their losses. So avoid overexposure by limiting your total open risks across multiple trade. For example, you took like so many trades at the same time. You should avoid that. At least take one trade at a time, or two, maybe maximum. So take breaks when emotionally affected. For example, you took a trade and you hit SL. Don't just go and start analyzing market again and you want to go back. No, try to take a break, and calm yourself. So analyze your trade to understand why you lost and learn from it. For example, anytime you lose, don't go and start blaming market. No, blame yourself and analyze that scenario so that you will understand why did you lose, so that you will avoid that thing in future. So manage correlated peers, e.g. euro US. I think I explained this from risk management class. I don't need to do it again here. So discipline versus emotions. So you need to accept that trading is not a get rich quick scheme. Focus on process, not profit. Because when you focus on you must be rich, you must be rich quick, you will end up blowing your account, all those things. But when you focus, like put it in your mind that this trading, it is not like get rich quick. Like treat it as your business. It is something that you are going to build it, small, 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 small till you reach your goal. Then avoid FOMO, that is fear of missing out. For example, you do your analysis and market come back maybe while you are not around and touch that your point of interest and market start moving. And when you come and so that market is already start moving, you go and jump into market without proper plan, because your previous plan has already been destroyed. So now you need to come up with another one. And at that time, you cannot come up with a good plan without putting yourself at risk. So it's better just to let that go. So don't let fear of missing out controls you. Or for example, you price is coming, is coming, is coming, it's coming, then you saw price start going back. Then maybe you feel like, price is going without me, let me just follow it there and join. And when you do that, then again maybe you will so market the retrace back and stop you out and touch your initial point of interest and price start moving. So FOMO will make you, because this FOMO like make a lot of people lose their money. Then avoid revenge trading after losses. For example, you lose now and you feel like you want to recover that your money before you leave market. No, when you lose, just let it go. You know, for now, just close your computer and just go and do something that will make you happy. Then maybe tomorrow, or maybe and come back and continue. So look for higher risk reward setup, like for example 1 to 3 or more for profitability even with lower win rates. So always trust yourself, trust your analysis and setups. For example, don't go and, for example, you do your analysis and then you saw somebody post something that is different than yours. Then you go ahead and trash your own and take his own without any like proper reason. Your only reason is this person is better than me or something. No, just trust your analysis, because everybody has what is working for them. Because what works for you might not work for me. What work for me might not work for you. So always trust yourself, trust your analysis and setups. As long as you follow your rules. That's why I said like create those rules for yourself so that you will be following those rules. So when you analyze market and follow those your rules, just stick to your analysis. Don't change your analysis because of somebody's opinion, except if he give you a good reason that can that can be able to like push your own reason. And withdrawal is part of trading. Always reward yourself first, because I know some people that maybe they will put like maybe $100 and trade that $100 to $500, $1,000, and they will not withdraw anything. They will say, no, I would like it to reach maybe $2,000 before I will withdraw. Then even after he reached that $2,000, he will still not withdraw. He will say, no, I'm going to let it no. When you have maybe like $100 and you trade that $100 to $500, brother, withdraw $300 and keep it somewhere, or even go and spend it on yourself. Then continue trading $200. And after you reach a particular threshold for that $200 also, maybe withdraw like 50% of the entire profit, and go and enjoy. That's how you will that's how you will keep that's how you will keep um um entertaining yourself. So that is what we call trade management. So like in trading, there is some like ways you will follow like to reduce your losses. For example, there is what we call break even. Maybe I'm going to do a practical video on this trade management, but for now I'm going to just do it theoretically. But I'm going to orchestrate my time again and do like one more video on trading management, but practically. So break even, move your stop loss to entry, to the entry point once price move in your favor. If price retrace, the trade closes with no loss and no gain, keeping the position risk free. So I let me just I think show you what I mean with this quickly. For example, here is my what? Here is my entry point on this trade. So for example, when I saw like this trade start going, reach here, right? So this is my stop loss. So instead of allowing price to come back, maybe I will just move this my stop loss to here, move it here, so that in case even if price come back and stop me out, I'm not going to lose anything. That means no gain, no loss. Yes. So that is what we call take partials. Take partials like is a like close a portion of a trade to secure profit while allowing the remaining position to continue running. This is reduce risks while maintaining upside potential. What I mean with this is um let's say let's say you have you are using maybe one lot, and you took a trade lot, your lot size, yeah, like you are using maybe one lot, and you are trading. Let's say maybe your profit is $1,000, and you still have more ways to go up or to go down to continue making a profit. And maybe you don't want market to come back and finish that your profit. You want to at least end up with something. So like booking partials or taking partials is like you edit that your loss size. When you edit it maybe to like 70% or 50% or like any percentage you wanted to take. Let's say you want to take like 70% of the entire profit, and you still want to continue being in the what trade. So you are going to edit that loss size while trading is still going. You edit it maybe to maybe 0.3, which you book like 70%. When you edit it to that, so like your total profit for that $1,000 maybe is going to like they are going to like cut the 70% of that profit and save it in your account balance. And then you will see you have remaining $300 in profit still running. So even if market come back, you are going to lose only that $300. That is booking partials. Maybe I will make more video about this trading management because it's very very important. And that is what we call adding positions. Adding positions. So this is where you might be able to need maybe to move your stop loss. As I told you from, I think it is risk management, you should avoid moving your stop loss. So I in this scenario on adding positions, so you might be able to, I think you might be able to move your stop loss. And that is what we call book full TP. So maybe after you get some particular profit, you feel like maybe you are okay with that profit, so you can go ahead and just close, that is close the entire trade once the take profit level is reached, securing all profit and exiting the market. Not. These small trade management skills make a big difference. Learn them well, they will help you grow and protect your profit. So, as I said, maybe I'm going to do a full video just for trade management in what practical way, so that you will see it the way you should be applying them. Accountability. So keep a detailed trading journal for every trade. That is what we call trading journal. Any trade you took, take a screenshot and write the details, like time frame, time, loss size. You did you win or did you lose? Everything related to that trade, you should journal it down, so that maybe like every week, you can come and you can come and um you can come and, what do we call it, like review those your progress and your mistake. So, and set realistic goals based on your system performance. Regularly review your performance to track progress. That's the importance of keeping a trading journal. Have a trading partner, community, or mentor to stay disciplined and motivated, because it's very important to have like trading partner, because sometimes if you are doing something alone, sometimes even if you are doing it right, sometimes you will be doubting, you will start doubting whether you are doing it right or not. But if you have partners, they will help you to, you will help each other. So building consistency mindset. Success in trading comes from repetition, discipline, and patience. Focus on what? Focus on executing your plan flawlessly. Profit are the product of consistency. Summary. Trading psychology is about managing yourself, not just your trade. Master your mind and you will master the market. So this is going to be the end of our sessions. I think we did a good job, because I said I will dedicate 30 days, but I think we finish this thing in how many days? I think 13 days. So yeah, it's a good thing. So thank you very much, guys, for watching. Uh, Even after this, I'm going to be analyzing market. I will be posting my analysis, so that like you will use the knowledge that we learn, like from our technical analysis. We are going to use that knowledge to be analyzing market together with you guys, so that you will learn from those analysis. So thank you very much, guys. See you in my analysis video.